This is Matt Godleski with Stewardship Financial Advisors, now CapTrust Advisors, bringing you this week's snapshot edition of The Pulse. Here's what we're watching this week. Equity markets reach new record highs supported by earnings, as bond yields climb on stronger economic data and Biden's stimulus plans, and the Federal Reserve remains on hold. Stocks remained at record levels this week as positive news boosted investors' risk appetites. The index's largest components reported earnings, and their revenue and profit growth numbers have been staggering. Expectations were high for these market leaders, but they provided support for their valuations once again. On the economic front, first quarter GDP grew at an annualized 6.4%, driven by a remarkable increase in consumer spending. Personal consumption grew by more than 10% for the quarter, the second fastest pace since the 1960s. Additionally, high-frequency data, such as travel and mobility readings, show the economy's rapid improvement. These outsized growth figures fuel new concerns over inflation as supply struggles to keep up with demand. For example, a semiconductor shortage has been making headlines recently. Further underpinning the recovery, unemployment benefit applications fell to new post-pandemic lows. Georgia was among the leading states with the lowest initial claims. Hiring expectations continue to improve as mass vaccinations bring new confidence for the reopening of businesses. Meanwhile, the Federal Reserve outlined plans to continue its ultra-loose monetary policy in support of businesses and consumers for the foreseeable future. They expect inflation to be short-lived and decided to keep rates at zero and maintain its bond buying program. Further fueling optimism, President Biden unveiled another $1.8 trillion of fiscal stimulus to support low and middle-income households and education. Given this encouraging economic momentum, we remain overweight equities. The question remains whether a Goldilocks environment of strong growth, low rates and inflation, and an absence of asset bubbles can be sustained for long. We expect volatility ahead as unprecedented monetary and fiscal support, historic economic growth, and rising rates create a recipe for big asset price swings. As always, we remain focused on unfolding market dynamics and reacting only when appropriate. Thanks for watching, and check out our website to read the full version of The Pulse for more details.